The US dollar is trading higher versus the three major currency pairs, the euro versus US dollar, dollar versus yen, and sterling versus US dollar. I'll go through the technicals that are driving these currency pairs for you as a trader. What are the biases? What are the targets? What are the risks? I'll go through all that in this video, so let's get started. Looking at the euro versus US dollar on the hourly chart, the price action last week came up to test the 50% retracement of this move to the downside. Since then, we've seen a progression of moves below key technical levels. Here in trading earlier this week, we found resistance against the 100 hour and the 100-day moving average. That was key. In trading also on Tuesday, the price then moved below the 200-hour moving average, and we capped the rises against that level both on Tuesday and yesterday's trade, finding early sellers against that level. And today, we're trying to get below this swing area down through here, which was defined by a number of different swing lows and swing highs through this area right through here. And in trading yesterday, we did try to get below that level at one little bar right here. That failed, pushed the price back up to the 200-hour moving average, and we're trading back down into this swing area between the 1.1581 and 1.1597 level. If we're able to get below that level, that opens the door for a move toward our double bottom down through here, which came in at the 1.15413 level. That would be the next key target that traders would be looking for if we could find support again against this level. We need to get it back above the 1.15976 level, in which case it's not unusual. It wouldn't be unheard of to head back toward the 100-hour moving average, toward the 200-hour moving average. Both of those are near converged now at 1.16289. So here we are sitting in this key swing area, and we'll see which way the market wants to swing. That's what we do as a trader, and we'll see how that pans out. Taking a look at the dollar versus yen in trading this week, we've seen a cap earlier this week on Tuesday against this old swing area right through here, which was defined by a swing low right through here, and then another swing lows through here, and then we became a ceiling through here. And once again, we came up, found a ceiling level there on the dip down here on Wednesday's trade. And Thursday's trade, we did find support against the 200-hour moving average, keeping the buyers more in play above these moving averages right through here. In trading here today, we've moved above this swing area, increasing the bullish bias, and that has given the go-ahead to push to the upside. We did get above this level right through here, which is a previous high, and trading currently at the highest level for the day. With the high price that we saw in the month of October. Up here is the next key target, 153.269. That's within a swing area going back in time, back through here as well. So getting above that level would be more increase the bullish bias for this pair. If I go back in time and take a look at this area right through here, bring it all the way back to here, you can see that this area was defined way back here with different swing lows and swing highs. So this area is going to be a key target on the top side. That's the next target for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. I'll look at the hourly chart for this pair, and what we saw from a technical perspective this week, more importantly yesterday, was the break below the 200-hour moving average. This is off of the CPI data, and then we retraced the entire move to the upside. Not the entire move, but most of the move to the upside. But found willing sellers against the 200-hour moving average. That's a green line in this chart at 1.33769. That led to this decline into the close, and then we saw increased selling into the Asian session and trading here today, where we found support buyers in this swing area down through here, defined by all these different swing lows through here. We broke below it here, got a little messy through here, tried to find support on a number of different occasions, and fell again. So the sellers really had their shot through here, and in fact, we took out this low right here, which should have set the price lower, but it didn't. We saw the rebound back all the way up to the top side after re-establishing support here, moving to the upside. Trading yesterday, we moved below this level, but could not maintain that selling pressure. Again, this came off the CPI data. When we started to move back above this level, we saw the snapback rallied back to the upside, but since then, in trading here today, we're back down into the swing area. This level comes between 1.3323 and 1.3341. Get below that level, it opens the door for further selling pressure. We're back into this extreme area down through here. Stay above this level, and the 100 and 200 hour moving averages up through here become the target for the pair, and we'll see if they can eventually break above that level. But like the euro versus US dollar, this area right through here is going to be a key barometer for both buyers and sellers in trading here today. So pay attention to it. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.